Hey YouTube, this is Zach with Achilles Financial, and today I'm going to be talking more of a macro view as far as what I'm expecting to happen over the course of the next few months. Keep in mind that most of this analysis is based as of market commentary from March 8th, which is when this video is going to be released, and that there are a number of macroeconomic indicators that are going to continue to be fairly volatile. So keep that in mind as you are viewing this video. But the first thing that I want to highlight is what I have here on the screen. This is the market's overview on TD Ameritrade. The main thing that I want to highlight is if we scroll down here below, you can look at individual sectors. And we've got the 6-month performance, which is what I'm primarily going to be honing in on. I've been a big oil bull on the channel. I've got a number of videos on Exxon. I've got a number of videos on Gush, which is a leveraged oil fund, and has continued to perform very, very well. However, there are a number of other stock sectors that I have been tracking, especially in some of my 2022 picks, that I am watching and saying is now the time to buy. And I think that we're approaching some attractive buy points. However, I do want to encourage the caution first approach, as there are a number of opportunities out there that, while good companies, you still may be catching a falling knife at this point. Now, as far as long-term investing goes, I think dollar cost averaging every 2 to 4 weeks is a great way to approach buying into long-term positions. So keep that in mind. But from a shorter-term horizon, I want to highlight that there are a few key areas that I think are going to be super beneficial going forward. One is going to be financials. So as always, I am a big believer in the capabilities associated with Bank of America and JP Morgan. And I think that should interest rates rise, that will benefit the companies long term. They do hold large cash positions. They have the capability to deploy additional capital. Their capital levels are very comfortable compared to the last recession that we went through, whether that was 2008 to 2012 time period, or whether that was 2020 with the COVID pandemic. So there are a lot of things to watch here. The key thing that I would highlight within financials is that with consumer sentiment down, with a very high cost inflation, and with the personal savings rate low, the idea that people are going to be taking out a lot of loans is just not there. People don't like to go into heavy debt when they don't have to. So that's something that we want to be watching going forward and see, are they going to experience the loan growth that you would have originally expected, especially going into a rising interest rate environment where they'd see benefits to those interest income. So that's going to be an area that I'm going to be watching. Another one is going to be hospitality, which again is not necessarily directly on here, but I really want to call out Airbnb, because Airbnb has continued to just get hammered down, and it is a company that I think is going to continue to perform very, very well. They IPO'd during the pandemic at a very high valuation. They still hold a very high valuation, but I think if we start to see them get below that $120 time point, this is going to be a lot of opportunity, and at that point I would consider buying in. However, one of the things that I just mentioned associated with financials that I think are going to continue to impact both travel, hospitality, as well as a number of other areas is going to be key among the inflation metrics is going to be oil. So again, you can see that this light sweet crude or crude oil above coming in today at another 5% up, $125. You can see that here, and down here below up $6.72. So this is incredibly high. We're seeing gas prices here in the United States higher than they've ever been, which is just ridiculous. Natural gas is another one that is incredibly high right now. You can see it's backed off slightly from the all-time highs which occurred last year, but as far as oil, we're still all the way at those all-time highs, which is ridiculous. So that's going to have a very high impact on the spending capability of the average American consumer, not to mention the macroeconomic environment. But on the reverse side of energy, on the consumer side, we have metals right here, and if we were to tie that into some of the leading commodities you see here, there's additional ones. But for metals, all of this is key to various components of manufacturing. One of the things that I would highlight is I am a big clean energy bull, in particular with STEM, and I would highlight that some items in in battery tech is going to be nickel, which is not shown here, but they had limit up day yesterday as well as today. You're going to see copper, you're going to see platinum, silver, gold. All of this gets manufactured and is a key component of a lot of manufacturing of batteries, of computers, of semiconductors. And the fact that gold hit a new all-time high today is just, again, showcasing the uncertainty associated with the current economic environment, as well as it is showcasing the fact that these are safe havens that people are placing their money in and buying this up, and the consumers are going to have to pay the price as these are currently used. So this is all super important to watch, and during the entire time, we're seeing that fixed income or our treasury or bond yields are staying relatively flat after coming off of a painful week the past 2 weeks. So you can see that the 10-year yield right here is currently sitting just below 190 basis points or 1.9%. So I anticipate that people are going, especially the big money, is going to start locking in additional bond yields to lock in that capital, to hold on to cash, and to keep that readily available. If you're on the edge of retirement, you don't want to go through another 2008, 2009. You're hopefully still up if you are an S&P 500 investor from where you were in 2019. You want to lock that in and roll that into a fixed income portfolio. And I think we're going to continue to see a lot of that. Admittedly, so far I haven't seen very high volume. You can actually see that down here below in the light volume that you see today. So that's something that I'm going to be watching going forward is, does that volume pick up? What is the big money doing right now? So this is a high level overview of everything going on from a markets perspective. This is going to continue to be very volatile. As such, I think that there's going to be a lot of benefits to buying in to or dollar cost averaging if you have a longer term horizon. But for shorter term trades, I think that we're still going to see some continued pain. There will be expectations of a relief rally if we were to see a very strong stance on peace talks, if we were to see the finalization of some form of annexation in Russia with Crimea and Ukraine. So that's something that we're going to be continuing to watch. So I would expect to see a short-term rally, but we still haven't dealt with the fallout of what these rising oil prices, what these rising commodities prices are going to have on the overall stock market and the companies that are reporting therein. There's a lot of pain out there, but there's still a lot of air in this bubble. And as such, I'm going to be watching to see if some of those companies continue to come down. This is just what I'm watching. Feel free to provide info or feedback in the comment section down below and let me know what you're watching or what I should be watching, and if there's any stocks out there that you think would be beneficial. If you made it this far, please leave a like and subscribe. It really helps the channel to grow. Thanks for watching. Talk to you later.